What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex and we're going to be going over the top 3 stocks that you guys should be watching that's having really high implied volatility, which means these stocks are going to have a pretty big movement in the upcoming days or weeks. So we obviously have FBRX, which has dropped pretty tremendously, all the way from almost $30 per share, and then tipping all the way to lows of $4 per share. So this stock got killed. And what we're seeing here is a bunch of basically insider trading, dumping their shares on the shareholders. So the retail investors definitely got screwed over here, while all the insiders, institutions ended up getting out right before the massive dump. So obviously we know that the market's kind of sketchy, a lot of shady stuff's going on, and the retail investors are always getting shafted, just like how we did today. Personally, I'm not going to be losing too much money on my position. I did end up selling a cash gear put at the lowest strike, the $15 strike, collecting around $400 of premium, which means I'm going to lose a few $100s, but it's not a big deal. I'm still going to be holding my cash gear put because it does look like it's rebounding pretty nicely, from $4 per share to $5.35 per share. That's almost a 25% increase. So if you ended up getting shares at the lowest point, $4, you're making some really good money. But overall, I do think that it will rebound a little bit. A lot of people see this as a really nice dip buying opportunity. As we can see in the after hours, it's slowly creeping up. A lot of people are ending up buying the stock just because of how much has been killed. So we have Forte Biosciences, and they dropped because they basically are scrapping their drug treatment for one of their clinical trials, and that ended up tanking their business a lot. So we have FBRX, we also have sprt, really high implied volatility, over 500%. So this stock is going to be pretty volatile, and this stock did end up occurring a short squeeze earlier in the week, last week. And ever since, it's been on a steady decline, which is not too exciting. Obviously, it declines and then has some little dead cat bounces right there. But it's not looking too good for support.com. Very high implied volatility, though. So anything can happen with these stocks that we're naming off right here. Personally, I haven't really touched this stock. I do think it's pretty risky, but let's quickly take a look at the options chain, see if there's anything worth noting. Robinhood is acting slow, probably because of how high the implied volatility and how messed up the options chain is for the stock. We'll probably check back later, but that's sprt, another high implied volatility stock. And the next one is going to be bbig. A lot of people are anticipating a really nice squeeze off of the stock. It's still pretty cheap at $8 per share, and it did have a nice run up early in the week, but now it's kind of fading away. It's still kind of flat ever since its run up last week. So a lot of people are anticipating a pretty big move, and the implied volatility here really shows that these stocks have seriously high implied volatility, and it's very unusual to have these sort of sky high implied volatility. It's really indicating a nice movement, but we don't know whether it's going to be to the upside or to the downside, so you have to be very careful. But these stocks are definitely going to have a really big movement in the future, so you definitely should keep your eyes on these stocks. And if you want to buy a lottery ticket, definitely these are the top 3 stocks to purchase a lottery ticket on. But of course, this is not financial advice, and it is very risky to play these 3 stocks that we're mentioning right now, but they can definitely explode to the upside or the downside. We just don't know where. So of course, bbig, pretty cheap stock. I still consider it a penny stock. options are pretty pricey as well. If you want to play it safe, if you want to do like the $6 or $5 strike cash geared puts, selling puts is the safest way to play these stocks. Kind of capitalizes on the high implied volatility, which means higher premium being collected, and it basically lowers your downside risk because you're selling really far out on the money cash geared puts. That means your cost basis, if you do end up getting assigned, is going to be very low. So if you just buy shares at this current price and a stock tanks, you're going to be losing a lot of money. Whereas if you sell a cash geared put at a very low out of the money strike, you're not going to be losing that much. And we saw that with my FBRX position. If I had bought 100 shares at $28 each, I would be losing a ton of money. I would be losing thousands of dollars. But I sold a cash geared put at $15 strike, collected over $400 of premium, which lowered my cost basis to just over $10 per share. So I'm not losing that much money, and that is why I love that strategy so much. But of course, I took a risk there, and it didn't end up paying off. I'm probably going to lose quite a bit of money, not too much, only $500 worth, which is just a small fraction of my overall portfolio. Of course, don't put too much money into these positions, whether you're just selling cash geared puts, whether you're about just buying and holding shares. It's very risky. Implied volatility is very, very high, so you gotta enter these positions with a little bit of caution. So that's about it for this video. If you are new here, please consider subscribing. It helps out a lot, and thanks for watching.